Hi guys, welcome back to my channel. In today's video, I'm going to go through some of the trades that I've taken for the month. Now it is the 29th of July. We have 2 more days to the end of the month, but this week is a Fed week, so I don't anticipate myself taking too many trades before the end of the week. So really this is kind of the overall month that I've had. It wasn't the best month for me personally. It will obviously look like a good month because I did make a decent amount. Just for myself, and I know myself as a trader, it just has not been the best month, and I haven't really capitalized on all of the opportunities that were available this month. I do just want to go through it because there were days where I had red days and there were days where I had green days, obviously, and then I had a day where I went from red to green, and I really want to show you guys that and kind of my mindset and how I was able to talk through that within Discord and also within just to myself, and be able to keep myself from revenge trading and then finding another high probability setup and being able to dig myself out of that red trade into a green day. I just want to say I post most of my live trades on either Instagram, YouTube, or TikTok as shorts because it is long to post them on YouTube, but I will put in clips of myself throughout this video so you guys can see how I talk to my Discord when I am live trading, and you guys can kind of see my emotions throughout that as well. But I'm going to show you guys my traders think. I'm going to show you guys the trades that I took for the month, and I'm going to go through some of them with you guys. Just the ones that I think are the highest probability setups, and ones that I think that I followed my trading plan, but I may have missed something and I ended up taking a loss on. All that being said, as always, make sure to hit that like and subscribe button, and let's go ahead and get started. Okay, so this is my overall month here. My win percentage is sitting at around 73%. I did take 19 trades overall this month. So I only took 19 trades, not a lot of trades. Like I said, I feel like I missed a lot of opportunity this month, and I was more frugal with my trades than I should have been. I feel like there was a lot more opportunity to capitalize on multiple different trades, not just SPX. And I kind of missed that, just focusing on SPX and being a little bit more, like I said, really picky with the trades that I took this month. Now you guys can see I took 19 trades. Out of those 19 trades, I had 5 losers, but I only had 4 red days. So one of those losers was the day where I was able to make it back up, but I had 4 red days. Now you can see that the red days in the beginning of the month weren't so hefty, and then I did take some heavier losses because I had sized up towards the middle of the month, and then I had to kind of stay consistent with that sizing to be able to obviously offset those losses. So one thing you don't want to do is, if you are in a deficit for the week or the month and you had sized up, you don't want to then size back down because it's harder to then make that back up. Some people think that that's, the wrong way to go about it. But if you size back down and then you have a profitable day, you then beat yourself up over the fact that you size back down. So you want to stay consistent throughout the weeks and months, especially throughout the month with your sizing. You don't want to size up or size down. You want to stay extremely consistent with your sizing. So the first trades that I'm going to go through with you guys are the ones that I took on the 18th. Now I ended up taking a loss on the puts. SPX ended up making a move down eventually. It just bounced while I got in. And then I'm going to go through how I was able to make that back up as well. So let's go ahead and go to the 18th for SPX. All right, guys, so we're going to go ahead and look at the 18th on SPX. So on the 18th, I was watching SPX below 55.95 for puts and above 56.20 for calls. And then I ended up watching it below low of day. So let's go ahead and take a look. So as you guys can see, and I just want you guys to pay attention to this, my initial plan on SPX, you can see here, watching SPX below 55.95 for puts, and this was right at 9:39. At 9:41, I then changed it to watching it below low of day, okay, because SPX ended up making a small move down. I had a gap to fill below low of day, which was 55.98 down to 55.88. Okay, now the mistake I made here is that below 55.98, my next level down was 55.95. So if I were to take 55.98, which was the low of day, I would need to take profit at 55.95, as that was the next significant level to the downside. This is not a good risk to reward. This is only 3 points down to probably a 5-point stop up. That is not even a 1-to-1 risk to reward ratio. So this was bad risk to reward, 1. And I should not have deterred from my initial plan, which was the 55.95 level. Whenever SPX gaps, even if it creates a low of day, you always want to make sure you enter the gap fill at the next significant level of support or resistance, which was 55.95. So that was my initial mistake there. At the same time, you can see that ES's pre-market low was around 56.40. So I should have waited for ES to actually clear 56.40 before me taking SPX puts. Okay, same thing with the NASDAQ. NASDAQ's pre-market low here was sitting at around 20,025. You can see that the NASDAQ bounced at that 20,025 pre-market low and was not able to clear it. So there's two mistakes I made here. One, the first one being I didn't follow my initial plan of waiting for SPX below 55.95. And then the most important thing is that I did not wait for futures to clear pre-market lows. Those pre-market levels, whether you're watching them on futures or whether you're watching them on any ticker, are significant levels. Before that stock creates a high of day or low of day, you need to watch pre-market lows and pre-market highs to assess where it could potentially reject and where it could potentially bounce. So those were the two mistakes that I made. I entered SPX puts at 9.45 on this candle here as it broke low of day. My first target was 55.95. Now I was up on this play very slightly, but I didn't take profit at that first profit target. I knew that was going to be my first profit target because that was the next significant level down. Again, not a good risk to reward. And as you guys can see, what happened here on ES did break its VWAP. It was trending below VWAP, as was the NASDAQ. NASDAQ didn't clear pre-market low. This is the 945 and 950 candle. It didn't clear that pre-market low of 20,025. ES was nowhere near clearing that 56.40 level here. You can see ES bounced way far above 56.40, and we ended up bouncing on SPX here. Now my stop loss on this play on SPX was 5,600, so I waited for the break of 5,600. I exited this play at 956 once this candle held above the 5,600 level. I exited the play on SPX and ended up taking a loss on this. Now you guys can see multiple things wrong here. All right, so right after I took that trade, obviously we ended up bouncing and I just waited it out for another play. I didn't fully like the upside move. I wanted to see ES clear 56.60 up here for the upside move, and when we did bounce, ES wasn't able to clear fully above that 56.50, so I didn't end up taking calls and I waited out the market. And as you guys can see, we did end up getting the downside move. So I was waiting for SPX again below low of day, which was this time the 55.95 level. I entered SPX puts at 10.33 with targets of 55.88. Now 55.88 was the end of the gap fill, and then below that, the next level down I had on SPX was 55.75. So I ended up taking profit at 55.88, I believe. Let me take a look. So I took profit at 10.35, 10.36, and then I locked the runners at 10.41. So 10.35 was the end of this candle here. Okay, into the open of this candle pushed down at 10.36. So 10.35, 10.36, and 10.41 were my final exits on this play on SPX. So this is the 10.41 candle, I apologize. Okay, so entered here at the end of this candle, right towards the open of the 9.34 candle, scaled out at 9.35, 9.36, and 10.41 at the end of this candle here as it got close to my final profit target of 55.75. Usually when I'm in a play and it's going in my direction, I don't wait for it to completely touch my profit target. I usually sell into strength. So that's what you always want to do, especially when you're scalping. You want to sell into strength. That way you capture the tippity top of your premium spike. If you wait until the next candle opens before your profit target, or if it's touching your profit target and you wait until the next candle open, especially trading 0 DTE, it can eat up some of your profit. So you always want to sell into strength whenever you're trading 0 DTE, especially SPY or SPX. But any ticker, if you're scalping, you always want to sell into strength to optimize your premium. So the premium on this did move really nicely. Now you can see the premium on the loss was about $3. So it was at $12. It dropped to around $9. And then the premium on the gain went from $11 to around $20. So I gained a lot more on the premium. I think it was almost 100% on this play here, as you guys can see. So even though I sized the same, I sized 60 contracts on both plays, I ended up making more on the move down because the premium moved. And this is why it's so important to cut your losses at your stop loss, because it is a lot easier to make back that stop loss and that risk that you had initially planned than for you to bag hold, take more than a 20, 30, 40, 50% loss. And at that point, it's harder for you to potentially make that up. I made this loss back up in one trade, okay? Just because I was patient, I followed my stop loss, I accepted the loss, I waited for another play, I re-entered, same size, held my ground, and I ended up catching an even bigger move to the downside than I originally had planned. All right, so another play that I want to go through is on July 1st. And this was also a winner. After this, I'll go through another loser with you guys, just so I feel like the losers are a little bit more helpful to learn from than the winners, in my opinion. So let's go ahead and go through. All right, guys, so let's go through this trade. This trade was on July 1st. I was looking for SPX for puts for the gap fill. Now, the gap started at 54.71, but my next significant level was 54.70. So that is what I was watching for the gap fill. I was watching SPX below 54.70 for the gap fill down. And as you guys can see, I was waiting for ES here to clear 55.25 with a target of 55.20. And then ES had a wick to fill down to 55.10. So really the main play here was ES to fill the wick down. But my initial entry for ES was below 55.20 to 55.25 to 55.20. So if ES broke 55.25, I would take SPX puts for the gap fill. On the NASDAQ, I wanted to see the NASDAQ clear its pre-market low of 19,900, which it did end up doing when I entered SPX. I entered SPX puts at 946. Once this candle opened below 54.70, at that time, NASDAQ was clearing, oh my God, I cannot talk. At that time, this was the 945 candle on the NASDAQ. It was clearing its pre-market low at 19,900. If we go ahead and look at ES, this is the 945 candle on ES. It was rejecting its VWAP level, making a move down below 55.25. So I entered SPX puts here at 946. I scaled out of SPX at 948, 949, and 950. So 948 at the open of this candle wants to touch my first profit target at 54.65. Towards the end of this candle, I exited some more at 949, and then 950 once it pushed into my final profit target and filled that gap at 54.60. I exited before we ended up getting the bounce. All of my profit on SPX here, okay? So I scaled out 948, 949, and 950. I locked it all. Okay, my targets were 54.65 and 54.60. 54.65 target hit, 54.60 target hit. Scaled out of this entire position. At the same time, ES at this 950 candle ended up touching the 55.20 where that wick fill started, so I was comfortable exiting. Now, we did end up getting the wick fill on ES later too, which was a higher probability setup. Even though the gap fill was a good setup, the higher probability setup was the 55.20 wick fill on ES. So this play was even a really good setup here as ES broke 55.20 at 10.10. This is the 10.10 candle on SPX, broke low of day, clean move down on SPX. So both of these plays, really clean move. Even though we got the retest on ES and the NASDAQ, they held below their VWAP levels. NASDAQ here holding below its VWAP level before continuing down. ES here not closing below its VWAP level, rejecting and making the move down for the wick fill. So overall, really good two high probability setups on this play, on this day on SPX on the 1st of July. And I ended up making around $12,000. My final exit on SPX was at $15.50, about a 50% move on this from a $10.60 entry. All right, guys, so the next play that I'm going to go through is from the 8th. I ended up taking a loss on the 8th. The premium went from $8 to around $7, so about a $3 loss here, and I lost around $7,500. So I was waiting for ES to clear 56.40 and for calls, and below 56.30 for puts. SPX above 55.80 for calls, and below that 55.66 for 55.70 for puts. I don't know why it says 55.66. This should not say 55. I think I meant 55.75. They typed that out wrong. But regardless, to the upside, I wanted to see SPX clear 55.80. I entered SPX calls at 951. So this was my entry here at 951. I had a stop loss of 55.80. So break and hold below 55.80 with targets of 55.85 and 55.90. Now I entered SPX at 951. Now if we go ahead and take a look at ES futures at 950, ES was nowhere near my entry point. Okay. So ES was right below 56.40. It had not cleared 56.40, and you can see there is so much wicking even after it pushed past 56.40. This is why it's so important when you are watching futures and you watch them on the 5-minute. I always watch futures on the 5-minute, and you always wait for a hold, a confirmation hold above or below the level that you are watching futures on. If you do not get that confirmation hold, you end up getting caught in fake outs like this. Okay, it will wick and wick and wick, and these wicks usually represent that there are sellers or buyers present in whatever side that you're watching it on. For this side specifically, there's sellers present that are not allowing ES to get past these certain levels, and that's why we get that aggressive wicking on ES futures or any ticker that you're watching. That's why you always, whenever you're looking for entry on anything, you want to wait for a confirmation hold, a hold above or below whatever level that you're looking for entry. If you do not get that confirmation hold, you are more prone to getting faked out of that specific play. ES wasn't even close to 56.40. I think I just got antsy on this play, ended up entering way before that. I should have waited for this candle. And if I had waited for this candle at 9.55, you guys can clearly see I would not have entered SPX, because this was a 9.52 candle, 9.55 candle here on SPX. It was pulling back. Okay, so it wasn't even following through. It was pulling back. Okay, so I entered at 9.51. This candle was pushing. I was up very slightly on this play. It went into 55.83. However, I ended up rejecting. ES wasn't even close to 56.40. Ended up rejecting. And I exited this play at 10.01. So the reason why I exited at 10.01 is because even though it cleared 55.80 here, I was watching to see if it would hold its 9 EMA. And I ended up exiting at 10.01 once this candle aggressively broke below that 9 EMA. At the same time, we got aggressive sellers come in at this 10 a.m. candle on ES, and we wicked back down. Ended up taking the loss on SPX here as it came back down. So multiple factors here in this specific play, especially with ES. Not waiting for the specific level to clear. This candle made no sense for me to enter, especially looking at where ES futures was. And if I had waited for even the 9.55 candle open on ES, you can see that it wicked down. This is the 9.55 candle on SPX. There's no reason I would have entered this trade. Okay, so it's so very important for you guys to pay attention to that as well. The next play I'm going to go through with you guys is a trade I took with SMCI. Now, as you can see, all of my trades this month, except for one, was with SPX. I did end up taking SMCI on the 9th, and I ended up making some money on it. So the reason I don't like to trade SMCI too often is because, one, the premiums are extremely expensive, and two, the spreads sometimes are a little wider, so you need a bigger move in order to be able to make up that premium. Now, I do call out multiple other tickers, and I have trading plans for every other ticker. I've just grown so used to trading SPX, but in the Discord, we do call out multiple tickers. We have people trading Tesla, Nvidia, AMD, so on and so forth. It's just that for me personally, I try to stick to one ticker, so I'm not pulled to multiple different directions. But I have missed, that's what I meant when I said I missed such good opportunities this month, is because I was so laser focused on SPX that I was missing opportunities all around the market. All right, guys, the next and final play that I'm going to go through with you guys is with SMCI. So I don't trade a lot of tickers. As you guys can see, most of my plays for the month were with SPX. I did take one play with SMCI this month, but I feel like I missed a lot of opportunities because I was so laser focused on SPX. There was a lot of opportunities in the market. Now, in the Discord, I do post game plans for multiple tickers depending on what has news and what has a catalyst. And sometimes those tickers outside of SPX, with SPX and SPY, if ES and the NASDAQ don't move, you're not going to get a move. However, if you have a ticker like Tesla, Nvidia, AMD, if they have news, even if NASDAQ doesn't give up the move, sometimes these tickers move just solely based off of their catalyst. So it's really important to make sure that if you do like to trade SPX and SPY, you do also keep these tickers in the background in case you have weeks or months where you're not getting a move from SPY or SPX. You still have opportunities elsewhere. I do feel like I missed a lot of opportunities on Tesla, opportunities that I had posted and game plans that I had because I was so laser focused on SPX. So I did end up taking a trade on SMCI. Premium went from $27 to $32, so about a $5 premium jump, and I made around $9,700. So let's take a look. So I was watching SMCI for the trend line break. So you can see that it created an intraday trend line. So intraday just means that it created it in that given day. So it created an intraday trend line. So I was waiting for SMCI to break the trend line and break 920. The reason why I wanted to see it break 920 is because that's where its VWAP level was close to sitting, and that was the next significant level down. Now you could have definitely taken this play right out of the trend line break. Personally, I do like to wait for specific levels, and especially if I'm taking puts, I like to see the stock trending below VWAP instead of above VWAP. So I waited until 923. I entered SMCI puts at 923. My targets were 915 and 905. I scaled out of this position at 1026 and 1027. At 1026, it touched my 915 profit target. And then at 1027, it moved into that 910 level. I had another level at 910. So I was comfortable exiting 80% of my position once that first profit target hit. The rest of my position I scaled out at 1105 once it hit that 905 level, and you guys can see here entered SMCI puts at 1023, 1026, at 1027, and then that's when I got off voice. I ended up holding that 20% until 1105 on SMCI. Clean profit targets, and this was a really good example of an intraday trend line break that you can take as a scalp. Okay, so it created that trend line. This is the swing low. If you kind of adjust this a little bit, so this is the swing low of the trend line. 1, 2, 3, 4, and almost 5 touches before it ended up breaking. It's a really nice trend line here. We ended up breaking and making a nice move down on SMCI. Now, when you get a trend line break like this, your target is always going to be the swing low. Your final target is always going to be swing low, and that's exactly what happened. That final target, where is it? Swing low, 905. It did. Once it broke that swing low, we ended up getting an even bigger sell down on SMCI. Okay, but you want to make sure that you have profit targets in between where you entered and your swing low. My profit target was 915, and you can see we retested. Where does it retest to? That VWAP level and that 920 level. Perfect retest, and then came back down and touched that 905 level, and that's why I didn't exit on the retest here. I ended up holding till 1105 because it retested that 920 level, and we ended up getting that touch to the final profit target. Alright guys, so I do just want to show you my ending P&L for July. So I did end up taking actually a few trades the last 2 days. So on the 30th, I took 4 trades, and on the 31st, I took 1 trade. So all of those were green. My ending win rate was around 78% with close to 200,000 on the month in July. Now, this is one of my bigger months over the past year. And I only took 23 trades overall. So really just my sizing was a little bit heavier in July, and I really focused on the risk reward and the quality of my trades versus trying to catch every single setup. And you guys can see that through my trades, making sure that my risk is in place and I'm following my stop losses was kind of the theme for the month of July. If you guys like videos like this, I will continue to do it like this. I can also post them live. Just let me know what kind of aspect you guys like to see more, and I'll try to post as much as I can. At the end of the month, I can do recaps like this as well. All right guys, hopefully this video was helpful. If you have any questions on any of the trades that I took, please post them down below. If you have any video suggestions or anything you'd like to see, also post it down below. Make sure to hit that like and subscribe button for more content, and I will see you guys in the next video. Bye.